Hello everyone, this is Tim Davis coming to you guys from the Bullish Bears team, and today is Saturday, December the 22nd. Just before the new year and before Christmas, I want to say happy holidays to everybody who constantly listens in and constantly support the Bullish Bears team first and foremost. And for those of you guys who don't know us, please visit our website at www.bullishbears.com. Again, it's www.bullishbears.com. Okay, this is Tim Davis again from the Bullish Bears team. This is my weekly, normally I try to do a weekly update of my current trade ideas. So this is my weekly update trade ideas video. Haven't done one in a minute. I've been out on vacation and some other things going on at home that kind of kept me away from trying to get a video done. But here we go. And what I want to do this time before I start off with my current trade ideas, I want to show you guys a lot of the trades I enter is mostly based on long-term charts because of the way I trade or the way I invest, trade, whatever you want to call it. So I want to start off by showing you guys the longer-term monthly charts of the current S&P, Dow Jones, and the NASDAQ, and show you guys how I, just pay attention to these closely in order to set up my longer-term trades. Now, I want to point out the NASDAQ, Dow Jones, and the S&P monthly chart over the past 10 years and show you guys something very, very specific that I, try to pay attention to. And I noticed that when the monthly charts start to break apart or they start to reverse, you can almost tell that it's time for a setup for a particular trade, whether or not it's going long or it's going short. And over the past year, in 2018, I saw the monthly chart it actually started breaking down, believe it or not, back in 2016. And we got a recovery rally back in 2016, back up to a certain level, back up to overbought conditions. Once we got overbought the second time, it looks like the market really, really starts to break apart. And I'm going to point out some key factors where you can see after we came out of these overbought conditions that the market started to break down on the monthly charts. And that's what it's time for me to load up on these, put debit spreads, and just hold and let them ride. So with that said, I'm going to highlight, circle a couple things on here to show you guys what you really need to pay attention to when you're trying to trade some of these positions longer term. You got to pay attention to see what's going on in the market. First thing I started to notice in 2018 is when RSI on the monthly chart, it started to break down. The RSI breaking down right here, coming out of the overbought area, and once it reached this center point, it's like there's no recovery. I mean, it's like it's going to continue to go lower. Once it breaks the center point on the monthly chart. On the chart, it's like a lot of action in the monthly chart. It shows you a lot. And so that shows to me that it's not going to hit this 50 and bounce and continue to go high. It doesn't look that way. So if you can compare it to when the markets broke down 2015, 2016, it kind of like broke down and it started to hover around this 50 area and RSI, and then price continued to go high and went back up into the overbought area. I think that was just a sign of what was to come. So we rallied nicely in 2017 without a lot of volatility. And then 2018 comes and the volatility starts to pick up. And then we start to break down again, which is a telltale signal that there's probably some longer term pain ahead. Okay. So that gave me, an idea. Okay, I want to start looking at some longer-term put spreads, see what sectors are breaking down most. And one of the ones that were really breaking down most this year was the tech sector. All right. So, point noted. So right now we're still in this big decline of the monthly chart, and I think that's probably going to continue part of 2019. All right, to keep an eye on right now on the monthly charts for possible bounces is right here at this. This right here that I just circled is a 50 EMA on the monthly chart. That's a 50 EMA on a monthly chart. A lot of those are strong. But what I'll also point out is that these red candles here on the monthly chart, these things are really, really strong. It looks like a falling knife to me. The 50, we may see it bounce around at 50, we may not. That's what we need to really pay attention to in the beginning of the first quarter of this year. Reason why, you know, I got a conviction that, you know, it's going to be rocky roads ahead and we may get a bounce. But if we don't, we can blow through this 50 like there's no tomorrow. Some of the things that can possibly cause us to blow through it is there's still a lot of trade uncertainty going on. There's a lot of economic woes going throughout this world. Political headwinds, especially in the U.S. and abroad, believe it or not. But in next year, you know, the House is going to be taken over by the Dems, and so you're going to have a Democratic House, a Republican Senate. There's going to be a lot of battles going on between the House, the House, and the Senate and the President. So that can spell a lot of, you know, more volatility in the near term. So if we blow through this 50, the next level that we'll see tested will be this 100. And I don't know about you guys, but I'm looking at this. This move looks very, very strong. This RSI move looks extremely strong. I've never seen it look that strong, except for, I'm going to show you an example when it kind of looked that strong back in 2009. Back in 2008, 2009, we got this big move. 2008 to 2009, we got this big move on a monthly. And you had, when it started to break down here, and all of a sudden after it bounced around a couple months, up and down, and all of a sudden it had this sharp move downward. I see a sharp move downward here too. That's what I see. Sharp move downward until we start to fizzle out, found a bottom. Only thing that's going to slow this momentum down to the downside is if we start to see some stability within our economy, some stability within the world, as far as the trade wars, as far as our government, we start to see some stability. Then this momentum to the downside will probably slow up. But right now, a lot of uncertainty within our market. So with this uncertainty comes much more volatility. So we're going to have to really pay attention to that now. So if you look at those breakdowns in the RSI, then you look at the big old red candlesticks, telltale sign that there's probably still more pain ahead. Take it even further. That's why I like to use a couple indicators to get a general idea of what's going on. Take it a little bit further, and some telltale signs in your MACD. MACD is also a big telltale sign of what's going on, especially, and you can you know, look at the MACD, look at the RSI, look at the candlesticks on the long-term monthly charts, get a general idea, and then pay attention to what's going on in our economy and the news, and it kind of matches up with what's happening. These charts will show you pain is, you know, what's breaking down, and you can pretty much understand why by looking at what's going on in the news and the economy. So back in 2009, we got a MACD bearish crossover. And you got the red line crossing over the black line above the zero line of the MACD. That's normally a bearish signal. Okay, and every time we get that crossover, there's normally some type of significant move to the downside. We got another similar move, smaller move here. Was back in 2011. But these bigger moves, you can tell because they kind of like dip on you, big dips. This is a bigger move. You can tell that's a bigger move there. This is a pretty significant move, 2015 to 2016. And if we go back up, 2015 to 2016, right around here is where you saw price start to break down. And you know, that's what happened in 2015, 2016. 2016, beginning of that year, we had a big decline and the oil market dropped like crazy. So now, fast forward to today. This is what we see now. And it compares to some of these bigger drops. And this one, I think, looks like it could be more significant than others. So as we are at the top in your RSI, in your MACD area, yeah, we had a huge level. The market been running so high, but you got there's crossover right there, and this one looks like it just wants to dive. This looks like a falling knife to me, a good falling knife setup to me. And so the next things I'll be paying attention to after I see that there's crossover right there, 2019, I'm going to pay very close attention to everything that's going on because this market could race to the downside. The histogram on the MACD, we're just starting to flip from positive to negative on the histogram. We're just starting to. If we look at the wins percentage, which is another indicator that I watch, wins percentage, we're just going into the oversold area on the wins percentage, and it's just starting. It's a big drop right here. Only other time we reach the oversold area, and this is very, very important, which really made me watch, be very cognizant of what's going on. Only time we reached that oversold area was back between 2008 and 2009, and this is what happened during that time frame. We really had some major issues trying to recover, even in some of these rallies. As you can see, it was a rally here, boom, right back down. So we could be in store for some pain in 2019, and maybe even 2020. This one looks like it has an early start, and we're way up here, so we have a long way to go. If it's gonna mimic what happened last year, in 2008, 2009. And one thing I'll point out, if you look at the Arun indicator, normally it's normally bullish when you see green Arun indicator on top. However, when you flip from bullish to bearish, it may take some time for the Arun indicator to catch up with everything else. Because as you can see, one thing I'll be paying attention to in 2019, if this Arun here, red starts to flip up on a monthly, that's going to be a telltale sign that this pain could last for quite some time. Because if it starts to move up and then take over the top area, like it did back here, then there's a lot more pain to come, and we're probably just seeing the beginning of it. We are just seeing the beginning of it on a long-term basis. Okay, now with that said, so that was just a NASDAQ composite I just showed you guys. Now I'm just going to flip through these last two so you see that it looks the same setups in the S&P as well as your Dow Jones on a monthly. Same setup. You can look at it. Just flip it there. You can see it, and you can review. You can go back and review this video again. Some browse through this. You can see that the same setup is occurring. Charts look exactly the same. That's the S&P. Now your Dow Jones setups look exactly the same. And we at the end of a year. At the end of a year where everybody's trying to update their balance sheets, end of the year. And a lot of even the algos, dump a lot of stock in the year. They don't know what the beginning of the year may hold. Looks like the beginning of the year, it could get rough. Wins percentage is already in the oversold area, and it could be there for a while. Now, we can move on to my active trades, and I'll show you guys what I'm actively in and what I may be in for a while. Okay. We are going to go straight to it. Okay. And that is not the chart that I was trying to pull up. Bear with me, folks. Bear with me, folks. I'm trying to load this up for you guys. Okay, here we go. Okay, so my current Okay, my current active trades, as you guys know, I am a bull on the marijuana sector, even though it's in the dumps right now. This is something that I'll be in for years. So even through all this volatility, I'll wait till the washout happens, whenever it happens. Next 2-3 years or so, whenever we start to get back on a bullish cycle. I won't be adding any more shares to any of them until I see, trying to see that there's some support is found. The CNTTF is a bullish marijuana stock that I've been in, and as you can see, I'm not going to go into details, but that's one of the ones I am as for bullish trade. I actually own shares of CNTTF now. Still bullish on gold. If you guys have been noticing, gold has been in a nice upward move, believe it or not, since August of this year. A lot of people have been sleeping on it, but it's been in a nice pattern, even though it's been up and down, but it's been a nice pattern, upward move, and I'll show you on the charts when I get to that part. But the gold position that I first entered was into the share price was at 116.25. We're much higher than that now. First target goal was 119. We already breached that, so this one I'm closing out and taking profits, a nice profit off of that one. About time to close this one out and make profits. But it's a 117, 121 call debit spread. I may stay in this a little while longer because it doesn't expire to the 29th. I already reached my first initial goal. I may stretch it out and try and make an attempt to reach this 121 strike, which I think there's a huge possibility that could happen with all that's happening with gold and with the uncertainty within the markets. Into the second bullish position on GLD. Share price and entry on this one was 117.50. First target goal on this one was 120.50. We're not too far from that. Original date entered on this one, 12/17/2018. Type of trade enter was a 119, 123 call debit spread, not expiring until June. Newmont Mining, NEM, into the bullish position on that one. Share price and entry $33 with a first target goal of $35. Original entry date on this one was 11/16. And actually, it should say 12/16, so I got to update that, you guys. I entered this one on, no, I'm right. I entered this one on 11/16, so I've been this for a while. Type of trade entered on this one is 33.36 called debit spread expiring in June of 2019. SH, which is a inverse ETF of the S&P. Inverse ETF of the S&P. So when S&P goes down, this goes up. Price goes up in this EFT. So ETF. Share price and entry was $30.70 with a first target goal of $32.80. Original entry date 12/17/2018. Type of trade entered 31.33 call debit spread expiring 5/17/2019. Break even of 31.59. ABX Barrick Gold. Barrick Gold. Which is in the gold sector. Bullish on Barrick Gold. It's been rough for the past week or so. And I think eventually it'll wash itself out before expiration. My trade does not expire. My position doesn't expire until July 2019. So I got some time to roll with this one to see how it pans out. Share price and entry was $13 with a first target goal of $13.75. Original entry date 12/17/2018. Type of trade enter 13.14 called debit spread expiring in June with a break even of 13.50. 13.50 is break even on that one. Okay, next. Okay, various positions. XLK, actually, in the process of closing this one, nice profit on it already. So this one's actually closed, you guys. XLK, I took profits on that, nice profit. SO, bearish trade on that one. Share price and entry was $47.10. $47.10 with the first target goal of $46. The original entry date 12/12/2018. Type of trade entered on this one was a 47.44 put debit spread expiring in May. Break even of 45.82. Also got another bearish trade on FEZ. FEZ, bearish trade on this particular ticker. Share price and entry $34.20 with a first target goal of 33.50. Original entry date on this was 12/6/2018. Type of trade entered 34.32. Put debit spread expiring in June. Expiring in May. Break even of 33.50. Okay, and last but not least, okay, another bearish position. I got bearish on MU, Micron. Share price at entry, 35.50 with a first target goal of 29.50. Original entry date, 12/13/2018. Type of trade entered 32.27. Put debit spread expiring June 2019 with a break even of 30.37. And XLK tech sector ETF, share price at entry 59.50. The first target goal of $55. Original entry date 12/21/2018. Type of trade entered 57.53. Put debit spread expiring October 2019 with a break even of 55.75. So as you can see, I got a lot of time in all these spreads for them to play out in 2019. We'll see how that works. All right, we'll take a glance at a few charts, and then this video will be concluded. All right, let's go to you. And I'm going to take a look at a few monthly charts on each one of these. I mean, weekly charts, actually. So I want to pay attention to the weekly. Okay, look at this stuff. No, okay. All right, so our weekly charts, pull those up. And we're going to have it defined here. So, chart. Okay, we'll take a look at a few of these weekly charts, and then you can take a look at some of the other charts you own. Let's take a look at XLK, so someone this bearish kick first. So as you can see, XLK, we're just reached the oversold area, which is good for this bearish position. Nice break below, and this is on the weekly chart, you guys. Already broke below the 100 EMA and approaching the 200, which is where I want to see this price action go on XLK. So that's how this chart looks. I am very bearish on XLK. Chart setup is setting up nicely, folks. It's setting up nice for this bearish position. So it still has some room to the downside. So that's a quick glance at the XLK chart. Let's look at the MU chart on the weekly. MU chart, same look, same look, just breaking below the 200-day, and I think this has more room to the downside. You guys will do it. I wouldn't be surprised to see MU. What is it? Get to 28. 28, maybe even $25 a share in 2019. That's just the way this market is going. And it's continuing to go south with China. It's going to be ugly, which is good for my puts. I mean, these puts of mine are really been very, very good to me in 2018. Nice profits. Okay, the next position I'll take a look at will be, let's take a look at FEZ. FEZ is another bearish position. You look at the weekly chart on FEZ, and what you'll see is, voila, the same type of scenario. RSI is just about to the oversold area, well below the 200 EMA on the weekly chart. So this is very bearish, and we still could probably have more room to the downside. 31 to $30 could probably be realistic in 2019. So with FEZ. All right, next one. This one right here. I might get a chance to be in for a while, because normally this is XLU, which is utility sector. It doesn't normally. It's a lot stronger than the whenever the market starts to break down. normally XLU stocks within the XLU sector show some resilience, and they don't, show as much, shows volatility, but sometimes it holds up a little bit better in this time of uncertainty than the regular markets. However, when the markets really, really gets hammered, XLU will eventually follow, and the stocks within it will follow. So SO, Southern Energy Company, Southern Company, I entered a bearish trade on that one, and I just see this chart just constantly starting to break down. Every time it has these rallies, it just breaks down. So I entered a bearish trade on this one, and this is the newest one. It has these rallies, then it breaks down. It has these rallies, and it breaks down. Nice rally. I'm looking for another breakdown. So I'm looking for another breakdown, and I think that's coming. So I enter this one, and I think next time, if it continues to break down, in this next breakdown, we could breach and break this 200-day in the first part of next year. So we'll see how that pans out. So let's look at the SO chart. It still looks very, very weak, which is very, very good for my put debit spread. Okay, next one will be SH, which is a bullish position that I have. Like I said, inverse of S&P. As you can see, S&P goes down, this one shoots up, and I think we do have a chance to eventually reach its 200-day moving average sometime next year, possibly. And see what happens when it gets there. It could hit it and reverse, and reversing the S&P would be, rising. But it could test that and reverse, and then test it again and break through it. We'll see what happens in 2019. But I'll be holding that bullish trade for a while. Okay, and take a look at GLD, gold ETF. Nice rise in RSI. As you can see here, RSI is rising, which is a good sign for this position. RSI is rising on the weekly chart. So RSI is still rising, even with the pullback. RSI is still rising. So that it looks like a good set. And we're still below the cloud on our still below the cloud. So without Ichimoku system shows us still below the cloud, and the price continues to rise. I think we'll eventually break through here and rise higher. So gold, looks like gold could be and we haven't a lot of the signs I'm gonna look for, like crossing maroon green on top of the red hasn't even happened yet. So I think gold has a long way to go. This could be a pretty good year that might be a pretty good year for gold. That's why I enter some of these gold trades now. Newmont mining. If gold price continues to get stronger, then I can see Newmont mining and Barrick Gold eventually get stronger, and get out of this funk that they've been in. They've been struggling to go higher, but it still has a rise in RSI. It's not rising as fast as gold, but they continue to rise, and we get a push. Look for Newmont mining to really break out. So this is the Newmont mining chart. I like it still. And last but not least, our Barrick Gold chart. This one has been making some strong push inside, but it keeps running distance. Every time it hits these moving averages, now it's running into resistance at the 100-day. Price will pull back in this one, but eventually I'm looking for to break through this, pull back here, maybe $12, $12.50 a share, whatever. But 2019, I'll be holding this one probably for a long time just to see it pan out. Okay, folks, that is my analysis of my portfolio, current active trades. I wanted to show you guys how it looks in stockcharts.com, because stockcharts.com shows a lot more details than some of the other chart systems that I use sometimes. So with that said, I hope you guys find something here that you can use. For those of you guys who follow us, please continue to follow us on our YouTube channels. Visit our website, www.bullishbears.com. And for those of you guys who are in our trade rooms, you guys know I try to pop in the swing trade room from time to time just to give you guys some updates on these trades and let you see how some of them are panning out. And if I kill some of them, early, I will let you guys know as well. All right. Until the next video, it's Tim Davis from the Bullish Bears team. Guys, have a Merry Christmas, Happy New Year, and I'll see you guys on the next video.